Assalamu alaikum wa rahmatullahi wa barakatuh. Bismillah ar-Rahman ar-Rahim. Jazakallah khairan, Irfan and the team at Muslim Youth Association for putting together this really great event. Something that's really important. When I was sort of going through high school, even part of university, there was hardly anything on normal financial literacy, let alone anything related to Islam. And as a lot of you obviously here, you're working at the intersection of your faith and your financial affairs. It's really important. So today really is a very short, condensed workshop that Ustad Abu Hakeem and myself and Irfan, we tried to brainstorm. It's not going to cover everything, but the idea is to give you some basic things to start off with. And what we hope is that it inspires you to go on a journey to get greater control of your financial affairs and to pursue some more knowledge. And inshallah, we really would love feedback about today's session. And we want to organize more events. And there'll be things like you might want an extended version, you might want deep dives on specific topics. So please share that feedback with us and convey that so that we can, inshallah, try and organize better events for you guys and more extensive content. So I'm going to dive straight in, inshallah. So today, it's really important that you, sorry, one second. Yeah. That today you please actively participate. But one thing I want to say quickly is that whatever we're going to cover today is general information only. We are going to get sued if we say this is financial advice. But it's all general information. So we are just trying to empower with knowledge. For specific things on financial matters, you should always speak to a financial professional. And that's the same as if you'd go for health information as well. So just sort of call that out. So please ask questions at any time. Just raise your hand or just speak. It's a very interactive session. There will be opportunities for participation. So I will ask questions. This is not a lecture like you would have at university or school. If you've brought pieces of paper, fantastic, please use them. If you haven't, I would suggest everyone with their phones just take out and open up a Google Keeps or a Notes, or whatever software you use. There will be some activities and you're going to benefit by reflecting deeply on your own circumstances. So please make avail of that. And the last thing is to reflect. Okay, so we're going to start off with budgeting. And with budgeting, one of the things to really take note of is that surprisingly a large number of people do not have a budget. They just go month to month or year to year and they don't know how much they're earning, how much they're spending. It's only when something goes wrong that they suddenly have to start working that out. The importance of budgeting is that you get on top of your affairs before it happens. So a budget, just as you'd hear in the news about the federal government's budget, at the beginning of that financial year or that period that they're budgeting for, they will forecast what is the income that's coming in and what are the expenses that we expect. And by doing so, allocating that income that's coming in to different categories. Okay? So it's a process of planning for the future. And that's something important in our deen as well. Because first of all, money it's a trust. It's given to us on the basis of Allah's ultimate owner of everything. But of course, it's not just about us. We have other people that we take care of. There could be our family members. There could be immediate, obviously, spouse and children, parents, community members, people that you might want to donate to. All of that requires planning ahead. The other thing about budgeting that's important is that very few people have a very consistent level of income and a consistent level of expenses. You will have expenses that are what's called lumpy. So you might have, for example, when you do your car registration, or you pay for a tuition bill, or you're planning some health, you've got dental treatment coming up. Whatever it might be, it requires you to plan ahead of time. And if we don't, then we're going to be receiving a shock of that. A couple of other things that are important is by budgeting, you're going to achieve 100% clarity of exactly what's happening to your money. So you can't sit there and go, I don't know what happened to my money. You don't want to be in that position. The other thing, of course, is that when you actually budget and you know what you're saving the money for, you're allocating, you actually don't feel guilty about it. You're in control. You're like, yep, I saved for this holiday, or I saved to upgrade my vehicle, or I saved for certain things that I need. Then you can be confident about it. Because a lot of this is about psychology, right? One of the things that happens with people when they don't manage their money very well is a cause of depression. One of the major causes of suicide and depression, and even marital problems. You'd be surprised how many marital problems arise from disagreements or misalignment about finances and budget. The last thing important to talk about is that it is about goal setting. We want to be very clear as Muslims that we have a clear plan, that we have a plan. Because we're not here for any other, we're not here like, oh, we're just going to live this life and somehow make it to the end. We are all focusing on the hereafter. We want to maximize the hereafter. And to be able to maximize the hereafter, it includes a number of things. You want to be in good health. You want to be able to donate and give sadaqah. You want to take care of your family. You want to take care of your parents. And of course, you want to have enough resources to perform important religious activities like the Hajj, to go for Umrah, and to serve your community. And this requires planning. All right. Now, important thing is about goal setting. So I said that budgeting is not done in a vacuum. We don't just do this for the sake of budgeting. There are clear goals. So you budget according to the goal, right? So a person who's budgeting at the start of their career, so when you're in your 20s and your 30s, it's a very different budget to when you're towards your retirement. The way you think about your income and expenses are going to be different. And the budget you do when you were a student is very different when you started your first job, when you are further down in your career. So it's important to ask ourselves what our goals are. So I'm going to get you guys to do your first activity. I want you guys to quantify some important numbers. So these are all personal numbers to yourself. Don't need to share them with anyone. But I want you to write down very clearly for next year, 2024, we're at December. What is your target number for how much money you want to have in savings? Right? So this is the surplus money that you are planning to keep after you deduct all your expenses. That's number one. The second number I want you to put down is how much of your debts do you want to pay off? Right? So think about any car loans, maybe you have credit cards, maybe you have home financing, whatever it might be, how much do you want to pay off? And you want to make a very clear, conscious decision to do that. And this is important. Rasul Sallallahu Alaihi Wasallam used to pray against being indebted. This was something that was seen as, he was very stricken with worry and concern for himself, but also for other Muslims, right? Debt is a burden. And so we want to try and deplete that as much as possible. So I want you guys, if you've got debts, and you might even have other things like student debts, whatever it is, please put a number down that you're like, I'm going to commit to try and put this down. And it's a rough number for now. The next thing is, everyone should be making an intention, inshallah, to put towards an investment portfolio. How many people here have some investments? I'm not talking about savings in a bank account or property. I'm talking about putting an investment portfolio with a fund or putting it into stock market or something like that. Yep. So only a few people. I want everyone here, inshallah, to make the intention to put towards an investment portfolio. It doesn't matter how much. So put together and say, look, I'm going to put some money in towards an investment portfolio. And remember, this is the goal for the whole year. So, and I'm going to talk about strategies on how to do that. So don't worry if you're confused, but I just want you to make a commitment that I'm going to put aside, let's say, if my goal is $100 a month, then at the end of next year, I'm going to put down $1,200 towards an investment portfolio. And if you're confused what that means, I'm going to explain it. Just bear with me. And the final thing is, I want you to think about what's going to be a net wealth balance. What that means is at the end of the year, when you add up all your wealth, your superannuation, your savings, your investments, what is that target going to be for you? And believe me when I say this, when you visualize what you want, you're going to increase the possibility of trying to get there. When you don't visualize it, then you have no idea what it is you're going towards, and you're not going to be able to hit it at all. No one wakes up and says, okay, by the end of next year or the end of 5 years, I'm going to have this, if they don't know what they're working towards. So it's important to try and articulate and quantify what that is. All right, so I'll give you guys another minute to kind of put down some numbers. Okay, now I'm going to talk about how do we put a budget together. What is a budget? A budget is a plan, and a plan including a few things that we need to put together. The first thing is we need to know what's our income going to be. Okay, so again, when you're referring to yourself, you can put down high-level numbers for now, but we're not going to have time to do a full exercise today, but I'm going to give you a link to a tool that you can use. It's a free tool, and I'll give you the link to it in a moment. So the first thing is, a budget needs to identify what is our income. Your income is the sum of your jobs, salaries and wages. So salaries for those who've got fixed salary, and wages based on hourly rates. That's the first thing. And you might have other income as well. Like if any of you guys are renting out property, that's in a form of income. The next thing is, we need to identify all the different things that we use from our income. Okay? These are the major categories of expenses. Now, first of all, let me ask this. How many people have a budget? Anyone have a budget? We've got about half the room. All right, those who've got their hands up, how many people regularly review their budget? Let's say monthly basis. Oh, even less, only a couple of hands up there. So budgeting is not just about setting it at the beginning, but it requires that regular review. And what that regular review involves is to break this down. So let's talk about the uses. So the first thing is you got debts. Now, some of the debts are automatically taken away. So for example, if you're paying off a HEX debt, it's going out of your salary, right? That's automatically gone. But you need to account for that, because if you don't, that's money that's deducted, right? The next thing is essentials, okay? Essentials are rent, electricity bills, your fuel for your car. All those things are essentials, things that you cannot go without. The other source of expenses we must budget for and plan for are savings and investments. And that requires an active goal that, okay, I'm going to save a certain amount. So savings and investments. And I'll explain what the difference is about them in a moment. The other thing, of course, is leisure, right? So there'll be different levels of leisure for different people. Whether it be you have a date night, for example, or you go out with your mates to eat out once a week or wherever, you plan a holiday, whatever it might be. That's leisure, some sort of activity that you do. And finally is contingency. Contingency is where you set aside a bit of money because there might be an unforeseen expense. Suddenly, you had suddenly a group of friends come together and you're going to treat them. You're going to invite them to your house and have a party. Or you're going to take some relatives that have come from across town out to eat something. So you'll need to kind of prepare for that. We account for all of these things because if we don't, then we're going to be in a position where our expenses might be greater than our income. And then in that situation, either we're going to reduce our savings or we're going to have to borrow money, right? So our goal with budget is that we want to be on top of that. After we've accounted for all the uses and expenses, we get to our end of month review. And this is what I mean by that review process. So you set a month at the beginning of the month. So let's say the next budget that inshallah hopefully you all do is for the start of January. At the end of January you go, okay, I said that this is how much I'm going to earn, this is how I was going to spend, what's my situation at the end? Am I overshooting it or am I undershooting it? And what do I need to adjust? This is the feedback loop. The feedback loop comes because we realize, hang on, I think I went out too much this month, right? Did I really need to go out that much? And if I did I need to spend that much? Did I save anything this month towards my future goals? If not, what's going on? How do I do that? Okay? So this is what a core consideration of budget is. All right. I'm going to go through a couple of really quick tips around budgets. These are some practical things that inshallah you can all implement. The first thing I'll talk about is the 80-20 rule. Anyone heard of the 80-20 rule? Yes? What is it, Ali? You're a consultant, that's what it is. That's not the answer I'm looking for. Anyone else? 80% of results is 20%. Yeah, you're talking about the Pareto rule, which is good. We'll talk about that. But in terms of budgeting, it's just a simple number. Anyone have a go? Yes? That's it. 20% of your money, like generally, this is what most financial planners and experts talk about. You should aim to put 20% of your income into savings. So what happens is you get $100 in, $20 that's in, talking about disposable income, so I'm not talking about pre-tax, because obviously tax takes away 20-30% already. As a rough benchmark, circumstances will differ for people, but as a goal, $100 comes into your account, $20 put into savings immediately, okay? If you do that, then you train yourself saying, okay, how do I live on less? How do I live on less and try and budget for that? So that's the 80-20 rule. It's a very simple rule of thumb to help you start saving and manage your money better. I'm not saying it's going to be the same for everyone. It might be 90-10. It might be 70-30. You can figure out what it is. But the point is, figure out a small, simple rule for yourself and automatically transfer that away. So that way, you're like, that's it. That's all the money I've got to play with. The next thing is savings goals and jars. So related to that, what do? That 20%, put it towards savings jars. Savings jars are different types of things that you're saving for. Remember we talked about the goals early on? What is it that you're saving for? Right? You might be saving for, and I'll give you my personal experience. So my wife and I, we've got a number of goals in the next 12 months. We want to do a bathroom renovation. So we've only got one bathroom in our house. We want to build a second one. And so that's a big expense. Like that's going to take a big chunk of money. So we don't have it all right now. We are going to save for it. So every month we put aside a bit of money. From that 20%, we separate it out into that category, which is bathroom renovation. We also like to do gardening. So we have a monthly gardening budget. So a bit of that goes into gardening. We're also saving for a bicycle. We want to go do some bike riding as the summer times come around. So that's another category. So whatever your personal goals are, put it towards it. Maybe you're planning a holiday next winter to get away from the winter cold. Whatever it might be. You might be saving for Hajj. My parents did that. For over like a year and a half, they were putting aside a bit of money every month towards Hajj, and that was one of their jars. I'm going to talk about some apps and tools you can use to make this easier, but it's important to have those clear. I mean, saving for the sake of savings is hard to motivate, but if you're saying, I'm going to save to a certain goal, it's a lot easier to do so. The next thing is, not working? Oh, you moved the screen. Yeah, you got to move that, sorry. Back on the PowerPoint. Just go to go to that one. Yep. Oh. Sorry, go back to the other screen. Yep. What's going on? Yeah, there we go. Okay. So the next thing is about debts. Debts, particularly if we have many different types of debts, it can erode obviously the value of how much that we can save. So one of the most important things, again, this is from prophetic teaching, is to try and get on top of debts, particularly if debts that have different financing rates, right? So for example, if you have a personal loan that you're paying off, it's a larger amount of money, then you want to pay that off before you pay off something that has a lower financing rate. Last year, HEX, for example, was at 7%, the indexation. That was above some other types of rates. So some people wanted to maximize that and said, okay, well, I'll just pay off a bigger chunk of my HEX debt. It makes sense, because why would you end up paying more for a type of debt that you can pay off? So it's important to get on top of debts, and it can be a great way to liberate more of your own finances. So keep an eye on that. The other thing, of course, with debts is that it reduces your ability to take more financing. Particularly if you're using a lot of the Islamic home financing companies, they tend to be very strict compared to normal banks. So you want to be on top of your debts. And often if you go to apply, and Ustad Abu Hakeem will talk about that, if you have too many debts, they kind of value your application less. You got like a car loan, personal loan, HEX, and you want to take a home loan. So just be mindful of that. The fourth tip that's important is financial accountability. It takes a lot of, to do it on your own, to manage your budget, keep on top of it, is a little bit difficult to do on your own with motivation. I've tried it myself, but when you have someone else to work with, it's a lot easier. So in my case, my wife and I, we sit down and we kind of review what we're doing. We have difficult conversations on what's happening that month. If we're having too many coffees, or suddenly there's an extra bag at the house that we didn't need. But the point is that you have a sense of accountability. You could do it with your friends as well, right? So what it means is, okay, did you hit the target or not? What went wrong? What can you improve? What are some bad habits that you've got? But accountability is really key. And you can even have accountability using apps. And we'll talk about an apps at the moment, which tracks it. If you don't track it, then it's all airy-fairy. The last point that's important, and this is something I talk a lot about, and sorry, I'm going to be a little bit real here. My concern with a lot of young people that I've worked with over the years is as soon as they make a bit of money, they get too excited and they want to spend it all, right? So I have friends, some people who are into their 30s and they have $0 of savings, right? I have some friends that I went to high school with, they have $0 of savings. And they've been working for about 10 or 15 years. And the question is, what happened to all your money? Oh, I spent it. What did you spend it on? Went out, bought things that I didn't need, and I have no savings. That's incredibly irresponsible for themselves and for their family. Because if something happens, where are they going to get their money from? Number one. Number two, they have not invested for the future. They're going to be less powerful in their objectives that they have down the track. If they want to support community causes, whether they want to afford a house for themselves, pay a deposit for a home finance that they want. A lot of people in our community tend to be pursuing a lot of branded stuff. You don't need brands, right? A car will get you from A to B. So many of the young people, as soon as they get their first paycheck, they're like, I'm going to get a Mercedes-Benz. These material things will not take you to the grave, right? They will not take you to the grave. When I was in university, I set myself goals for my clothes. I would only purchase clothes, typically during Ramadan or during the start of the year, and I would set myself a very clear budget. My shirts and pants are going to be within this amount. I'm not going to buy more than that. So I only went to Lowe's and Lowe's and Kmart. Those are things I did back then. Right, I have a little bit more purchasing power, but I did that then. But those habits still stick with me. Even now, I set myself a budget for how much I'm going to eat out during the week. Right? How many times I'm going to go out. And starts with being content. If you're going to compare yourself to another person, then that's your goal. Okay, if I'm just going to be like, I need to get that branded stuff, I'm going to live that very hi-fi life right now, then you're not going to achieve your longer term goals. Right? It's really important to build contentedness. Having that gratitude for Allah subhanahu wa ta'ala has given me, because if you keep pursuing the dunya, you're never going to be able to satisfy it. Rasulullah said this, that if he doesn't fear poverty for the ummah. He said that, right? And he said if the ummah was given a valley full of gold, they're going to want a second valley full of gold. So this all comes from psychology. And I learned this from living with and working with people in other communities, particularly in some of the other faith communities. They have incredible levels of discipline about how they save their money and how they invest it and how they approach their life. I found a lot of the young people that I've worked with, including my friends, we tend to avoid, we want to have everything right now, right? So if you develop that attitude at an earlier stage, you'll value things a lot more. One of the things I found amazing, I was listening to a talk about Rasulullah. He used to name his belongings. Has anyone heard about this? He used to name his belongings, his comb, right, his miswak. And you just think, why is that psychology behind that? And the thing is, when you name something, you value it. You treat it with something that you want to keep for a long period of time. So buying fewer things that have value and last is a lot better than just going through things. And that's an important budgeting tip, because if you keep spending on all the flashy stuff, you're going to lose your money really quickly. All right, enough about that. Now, this is a tool. Oh, is it Asr?
Yeah, they just did the other
Okay.
couple minutes.
Couple minutes? Okay, so do you want to pause it here? We could. Okay, I'll just finish this last slide and then we'll do the exercise. So there are some really cool apps out there you can download. There's so many of them, so I won't name all of them, but one that I use very closely is an app is by the bank called Up. It's a new fintech. It does this job really well. You can automatically allocate your money into savings jars and you can track that along. Now, the downside of App is that they don't have an option to turn off interest. So it will generate interest. Like for example, with my Commonwealth bank account, I've told the bank I don't want interest from my savings. So they automatically turn it off. Up doesn't. So if that's something that you should have a look at. But there are other apps out there as well. ANZ has a really cool app. Combank have an app. Whatever it is, get organized. Get on top of that. And automatically. So this is a bit of an illustration. You can see that this person is tracking where their money is being put towards. They're having a budget for rent and also car rego. Okay, so that's just a bit of a tip on trying to get down on top of technology. We'll end it there, inshallah. What is 20% of your earnings that you can target to put away? And start to think about where can you save it? Do you have a mechanism to do so? So remember, I was trying to be very practical. So do you have an automatic feature in your current bank account that can allow you to do that? If you don't know the answer to that, please take a note to research it for homework. Is there another facility you can put it towards? I'll give you an example so what my parents do. So there's no Islamic bank at the moment. So my parents automatically transfer some money into ICFAL. They were early members of ICFAL, so they automatically transfer that as a way of savings, because ICFAL has a 30-day call period. So that's an example where we save it. So my wife and I, what we do is we use the Up app and we automatically transfer that. So whatever the practical mechanism you're going to commit to do, or at least research, please note it down. All right. The next thing is, what are your savings goals? Now, just put down 3 to start off with. What are 3 things that you really need next year that's important to you? It might be something physical, it might be an experience that you want to undertake, or it might be something else that you're pursuing. Maybe it might be something you're investing in your own learning or development. Okay, so put down 3 things that you want to save for. And it can't be something like, oh, I'm going to save to go out. Like, that's not exactly a saving because it's a smaller amount. Unless you're spending a lot for going out, which I don't know if it's wise. But yeah, just 3 goals and put down some numbers. All right, once you're finishing that off, give you a minute. Oh, okay, unlock it, sorry. I'm not another brown kid. All right, the next one. What are some debts? So if you've got some debts, think about what are some of the highest ones that are most expensive to pay off. Identify them. Also think about, can you consolidate? And just the answer is yes or no. Can you consolidate it? If you can consolidate it in some way, then that's great. What consolidation means is, can you pay off some of your smaller debts with some of the other debts, and that way you have a simplified number of accounts. Okay. All right, the next one, how will you be accountable? Are you going to use an app to help you track your budget? Or is there a friend or a family member that you can use for accountability? Someone that you can work with and discuss with. Just note down who that person is, and then you can have a conversation with them. It's just like you would do with your fitness goals, right? Who's your gym buddy? Who's your friend that you go running with? How about for your healthy eating patterns? Similar sort of exercise. When you're accountable to other people, you also, interested in psychology is you also overcome your own bias. You might be more forgiving to yourself, but if a friend is there to keep you on a leash and say, look, you're committed to doing this, you're not keeping on track, what's going on? Okay? And the last thing is, how are you going to build contentedness and gratitude? One of the ways of being content with the things we have is, if we take the sunnah of Rasulullah, is to acknowledge really what are the things we do have. You know, suppose, like for me, in my line of work, my laptop is everything. I need my laptop for everything that I do. Without it, I would be nothing. How often do I acknowledge that to myself? I ask myself. How about your car, if you really need your car to go places? When you start taking stock of the things that you have, you'll be more grateful. Not only does it build gratitude, but it also allows you to reflect on, do I really need that thing that I'm just pining for all the time? One of the great habits, and this is not just for financial management, but for generally in life they recommend, is doing a daily gratitude journal. Anyone here have a daily gratitude journal? Yes? Mashallah, everyone's sister's doing that. If there's one thing to take away from today that hopefully will change your life, and it's not just coming from me, this is from the Quran. Allah subhanahu wa ta'ala says, لَإِن شَكَرْتُمْ لَأَزِيدَنَّكُمْ. If you are grateful, Allah promises He will increase. If there's one thing to take away from today, please just inculcate gratitude. And that includes gratitude for the physical things that you have, and also the other things, your health, your relationships. That will set you on a different path. Because you suddenly think, hang on, I don't really need all these things. I find it amazing. You know how when you see ads, you look at perfume ads, they try and sell this lifestyle. Or they sell you an ad for a car, and you're like, it's showing this Porsche car or Mercedes, and it's trying to convey a sense of an amazing life. And I look at the ad and I go, I'm not inspired by that. I don't know what you're trying to sell to me, because I don't buy it, right? Most ads you'll see are just absolutely pathetic. And you start to build that in your mind. But then if you're suddenly thinking, hang on, all my friends start to have that, I'm seeing it on Instagram and Facebook, just turn that off. Like, when you're in a state of complete gratitude and contentedness, you realize the majority of things you don't need. I just need my clothes, I need my food, I need my transport, and I have my people that are around me and I have good company with them. Alhamdulillah. All right, next thing. There's this QR code. We're not going to have time to do this, but I want to just show you what that looks like. So there is, we did a very quick exercise with the budget. Like, you do need to spend more time doing that exercise properly. So I've got the link up there. Can you just Control-Alt? Yes. Okay, so... Oh, it's not sharing that one. We'll just do the window then, I think, isn't it? Okay. Is that not? Why is it not sharing? Oh, it's sharing, but it's not. It's not the one on the HTMI. Okay, sorry. I will. Yep. Here we go. Cool. The Australian Securities and Investments Commission, which regulates a lot of financial industries, they have a lot of really good material. I strongly recommend you spend some time on it. They have a particular, the QR code, and I mean, we'll make the slides available to everyone, yeah? Yeah, so don't worry about taking the slides or the codes, we'll send them out. But they have a really good budget planner. It takes 20 minutes to do, but it's a very thorough one. You just scroll down. Yep. So if you keep going down, there is an Excel spreadsheet as well, but go down further. But it's an online tool, so you enter it online and you can print out the results. What it does is it helps you break down. If you click on the first one, yep, you calculate for your household level all your different types of income. And it's important to figure out all your types of income, including if you have overtime and bonuses, because that can sometimes be really important. Go down further, please. Let's go to personal and medical. So here you can break down all the other things you might need. So things like, okay, eye care. You might have a regular eye care budget, or you might have an annual upgrade, dental, and things like that. So all those categories, it breaks it down. Let's go back to the PowerPoint. Yep, cool. Scroll to that page. Should be. No, you just got to click it in. Yep. It's just. Okay, cool. So we're going to talk now a little bit about savings and budget, savings and investing, because they're two different things. So we did the budget. The budget identified what you earn and what you're spending money on. And we said one of the categories you should do is to savings. Okay? So I want to explain the difference between saving and investing because they're different. Saving is that first step that you did in your budget, which is just you got your money, you got your $100 in, $20, you put it aside. Money that you're not spending. So savings is simply the money that you're not spending and you're putting aside. It's not doing anything, right? I mean, you could save by just taking physical cash out of the bank account and putting it under your mattress. That's saving. Usually what people do is saving in a bank account, right? Now, the challenge we as Muslims have is, and there's a number of them, but there aren't any Islamic banks, so there's no halal bank that's going to give you a return on your savings. Now, most people, when you put money into a bank account, you get a return, which is interest. And the reason the bank pays interest is because the bank is taking your deposit. It's a middle person between the deposit that you put in to someone who wants to borrow. So the bank is the middle person. They will pay an interest rate, maybe let's say at the moment it might be 5 or 6%, and they'll charge someone 8 or 9%, and they make a profit on that. That's how a normal bank works. Now, as Muslims, there are no halal banks yet. Islamic Bank of Australia is still some way away. We don't know yet when they're launching. So many money you put in the bank, it's obviously safe there, but generally we're not earning anything on it. So that's the kind of key difference. Now, of course, it's very safe. What makes a bank safe is because the government, through taxpayer money, is guaranteeing that money. It's other words, there's a few other words that they call it capital guarantee, capital protected. So in Australia, any bank account is protected until $250,000, right? So if you have up to $250,000 of your money, if something happens to the bank, let's say the bank shuts down, the taxpayer, the government, through taxpayer money, will reimburse you for that loss. Now, I don't think historically there's ever, Ustad, has there ever been a banker collapse in Australia? Yeah. And they collapsed? Okay. The money? Yeah, okay, cool. It's pretty safe, yeah. So, alhamdulillah, look, we live in a country generally that's a very stable financial system. So putting your money in a bank is pretty safe. You can assume it's, inshallah, almost 100%. Now, obviously, you can never say never because in the US, we had Silicon Valley Bank go down. In 2008, a couple of major banks went down. But generally, the idea is money that you put in a bank is safe. Now, as Muslims, we don't earn any money on it. Like, we shouldn't be taking interest. And I'll get the Ustad to go through the fiqh aspects of that, and I'm not going to comment, but generally, we don't take interest. So we're not earning any money on it. This is what differentiates savings to investing. Investing is where your money is set to work. It is applied to a productive activity to generate a return, okay? And what that means is it's going to be more risky, right? So that's why I put on this side more risky. Less risky is savings. What's an example of investments? We're going to cover a number of different types of investments, but I want to just explain the difference. Money that's just sitting aside and not doing anything is saving, as long as it's fairly well protected. I mean, yeah, you can put under a mattress or put it in your home. You're safe unless someone's going to break in and take it. But investing is when you're putting your money towards some sort of activity, and it's going to carry a risk because no one can guarantee your money's safe. And I say that really importantly because there are a number of scams in the Muslim community where people promise, oh, your money's safe, brother, don't worry about it, it's going to be okay. There was a major financial institution that went under a couple of years ago called ICFAL. Anyone heard of ICFAL? This is probably a bit before your time. Ustad knows, he's smiling. When the ICFAL went around to Muslims to invest with them, they told them that your money is safe. No money is safe. Even ICFAL, Ustad, you cannot commit ICFAL's money safe. Is that right? It's not safe. I mean, look, like the brothers who are managing ICFAL, mashallah, they're some of the best in the industry, but they can't promise you. That's the thing. They cannot promise you that it's safe. Only a bank can, and until 2050. So I just want to make that clear. I hope you guys don't ever fall into a scam, but a lot of people have fallen into scams. All right, next point. Why do we need to invest? The main reason we need to invest, I explained one reason already, which is your money, if we're putting our money in a bank account, we're not earning any. I've had my bank account since I finished high school. I'm not going to give away my age, but many, many years ago. I've not earned any interest from my Commonwealth Bank account. Now, my friends who put their money in Commonwealth Bank, they probably earn thousands of dollars in all the time. So that's one reason that we should invest our money, because it's not earning us anything. I mean, Islamically, we shouldn't be earning the interest. There is another important reason why. And everyone probably is feeling this. Things are more expensive. Why is that a problem with savings? The reason it's a problem is because if I have $100 today and I go to Coles and I buy $100 worth of groceries, that $100 in a year's time or 2 years' time is going to buy me less things than I was able to afford before. That's what inflation is. When prices of things rise, my purchasing power, the ability, or in other words, think about it practically, what I can get with that $100, what it can do for me is going to be less and less. So if the inflation rate is, say, 5%, just to make the math simple, my $100 can now buy only $95 worth of things. If another year goes by, I'm only going to be able to buy $90 worth of things. If I at least invest something that generates 5% return, then at least I can keep my money on track with inflation. If my money is earning more than 5%, then I'm making a surplus. Is that all clear? Is everyone clear about that concept of inflation? Have I lost anyone? Please, I mean, don't hesitate to raise your hand or ask questions. So inflation is an important reason that we try and invest, because we want to make sure our money does not lose value. Okay? All right. I'm going to talk through a number of different investment instruments that are available. Sorry, it locked. Yeah, sorry. So how can we invest? What are the different types of investment instruments? Ustad leads up ICFAL, which is a type of investment organization. It's a cooperative. As Irfan mentioned, I'm a manager of a fund called Wholesum, which is another investment solution. So there are many investment solutions out there. I want to break down the key investment assets that are out there. And I want to explain what they are by definition, and I want to talk about the pros and cons. Remember, if anyone is selling you a guaranteed return, be very skeptical of them. Every type of investment has pros and cons, and they will have different types of usefulness for you. This is why I said at the beginning, always seek financial advice. You need financial advice because an expert can sit down and talk to you and understand what your needs are. Okay? Just like you're not just going to go to your friend and say, should I get these teeth removed, or should I get that surgery, or should I try this medicine? You need an expert to talk you through your options. But let's be armed with knowledge so we can understand it better. So the first type of investment, there's 6 categories I'm going to go through. The first one is cash. When is cash a type of investment? When you put it in a bank. Right? So those who are earning an interest from the bank account, that's a cash investment. What are the benefits of that, first of all? The benefits are it's very easy to take that money back. If I go to the bank and I deposit today, and I want to pull my money out tomorrow, they will do that. They'll give it to me. So as an investment, it's very easy to put it in and take it out. And also we explained earlier that the risk is low. Okay? So cash investments there. Now, what are the cons of cash investment? The returns are going to be low. Right? So the interest rate the bank is going to give if you're getting money from there, or if you had an Islamic bank, the returns are going to be very low because remember I explained what they do. A bank takes money from people who are depositing and they give that money to another individual or company who wants to invest and use that money to buy a house, invest in a business, whatever it might be, and they are the ones who make a profit on that. So the returns are generally a little bit lower. So this is kind of the pros and cons of cash investments. There are certain other type of instruments, cash equivalents and treasury bills. Again, we don't have any Islamic options in Australia at the moment. As far as I know, Ustad, there's no short-term cash investments. Yeah. But if you go to Muslim countries, there are a lot of short-term cash investments. I'll give you an example. There might be a finance company that issues an ability to invest with them for 3 months, 1 month, 6 months. These are very short-term investments. In Australia, again, there aren't any Islamic ones, but if you want to know examples of what they look like, there's companies like Latrobe Finance. They offer short-term investment opportunities where you put your money with them for 3 months, 6 months, and they'll pay it back. Another example is a term deposit. Some banks will provide you with a term deposit where you say, look, your money is with them, you cannot pull it out, you're committed for 3 months or 6 months, even there are 12-month term deposits, but it's seen as a very like cash because you can get it back, it's generally very safe. Okay? Everyone clear about cash investments? Yep. All right. The next one is stocks. Stocks are where you buy a small share or ownership in a company. Okay? You can have stock investments on a public stock market like the Australian Stock Exchange or the New York Stock Exchange. What that means is you're buying into the company and you're now a part owner of that company. You can also buy shares in a company that's not public. So what a public company means is it's listed on a major market, but also, let's say I start a business and I want 10 shareholders and I get 10 people in this room to become shareholders in my company. You're all joining in as a partner. This is actually there is a good tradition of becoming shareholders in a business in the Islamic faith as well. It's known as musharaka, where you become joint venture owners in a company or an activity. So you become shareholder. What does that give you? It gives you the right to vote. So when you have an annual general meeting, you can vote in the company. You can vote to remove the management. You can vote on restructuring the company. You also get a dividend. What a dividend means is the company at the end of the year, the income that it generates, minus its expenses and the taxes, it'll get a profit. And then from that profit, it'll distribute that profit to the shareholders. That is called a dividend. But also a company can increase in value, right? So if the company is worth, if one share in the company is worth $10, and let's say that company now has grown, it's become a bigger company operating in more markets, it's generating a lot of profit, the value of that company will go up. And so my share in that company has also gone up. Okay? So that is known as capital gains. So the two ways you can make money with a stock investment, number one, dividends, which is the profit distribution at the end of the year. Number two is the capital gain, which is the value of the share has increased. How do we invest in the stock market? You can buy shares directly from the stock market using a broker. Okay? We don't have a lot of time to go into showing you brokers, but if you look up brokers, there are many online brokers out there. And in the Q&A, we can talk about brokers. You can also invest through a fund. So I said at the top, you can invest directly or by a fund manager. What that means is you can yourself go and buy it. So if you use a broker, you buy and you have direct ownership, or you can have the ability to buy into that asset by a fund manager who specializes in stock market investing. So for example, we'll hear from ICFAL later on, they're property investing. You invest to them but via ICFAL, okay, which is an intermediary. Everyone clear about stock market? Have I lost anyone? All right. Now, you can buy individual stocks, but you can also buy a group of stocks together. That's called an exchange traded fund, which is where in one purchase you buy many small parts of many companies. It's a way to diversify your income. In fact, again, just talking about my circumstance, when I got married, I asked my wife, "Do you have any money?" I wasn't going to take her money. I asked her, "What are you doing with it?" She goes, "I just have it in a bank account." I said, "Well, you're not earning anything on it because we can't be earning interest. Why don't you put it aside for your own financial independence?" So I opened up her account with a broker, and her money that she had, she put into a broker, and I bought some Islamic ETFs. The reason I bought Islamic ETFs was because it was going to be very complicated for her and for me to manage many different stocks. We just said we're going to buy these ETFs, and we bought 2 particular Islamic ETFs. And with that ETF, by buying into that one fund, it allocated the money into many different companies. And by doing so, we are diversifying the little bit of money we had into many companies. So they're called ETFs. Again, you can look them up. There are many ETFs available, and you can buy them just like you could buy stocks through a broker. The benefits are it's very well diversified. The downside is that it will tend to track the market. So if the market is going up, it'll go up. If the market's going down, it can come down. Stock market investing is generally it's a very effective way of investing. There's a lot of information because any company that's selling stocks on the public market, they will disclose their financial information. The downside of stock market investing is it's not going to give you, the return is going to be very volatile. So for example, the stock market's going up, all the companies are going up, it's a booming market, but then it can also go down. So you'll have very lumpy type of return. If you're looking for a short-term investment, it might not suit your profile. But if you're going to put your money in there for a very long period of time, it can be a very effective way to invest. Warren Buffett, which is a famous investor, he was mentored by Charlie Munger, who passed away 2 weeks ago. He used to suggest that don't try and beat the market. Time in the market beats beating the market anytime. This is like a phrase. I'm maybe butchering the exact phrasing. But the idea is you put your money in the stock market and you don't touch it. After many, many years, it will rise up in value. And there's a lot of research about this, and you can look it up online. So that's the idea. But generally, it's for long-term investing. If you're going to invest for the short term, like if I buy a share today and I sell it tomorrow, I might actually lose money. There's no guarantee it's going to go up. So just be mindful about, and we'll talk about time horizon in a moment. The next one we're going to talk about is bonds. Bonds, or in Islamic finance, they're called sukuk. This is a type of fixed income type of earning where a company is borrowing money to do a project or to expand a factory, and they will give you a regular payment from that project. Okay? You can also buy bonds like you buy stocks on a stock market or a listed exchange. And you can use brokers to help you get that as well. Also, there are fund managers that specialize in bonds or sukuk. In Australia, we don't have any Islamic bonds or sukuks that are issued, but you can buy sukuk or bonds from international companies. For example, the Emirates airline has a sukuk for its airlines. Some of the big oil and gas companies have sukuks you can buy. But again, you have to be mindful of the fact that they are in a foreign currency. So you've got to worry about the currency risk. This is obviously a good way of investing. The returns are a little bit lower because it's fixed income. What the company is saying is, look, we forecast what our earning is going to be, and we're going to give you a regular payment from it. So it's a good way of having a steady income source, but it might be a bit lower compared to stock market. So again, pros and cons. Yes? Yes, Hejaz has, yes. Their sukuk fund is made up of sukuks that are not Australian companies or projects. So it's a sukuk. What it means is, you know how I said you can do it directly or by a fund manager? In that case, Hejaz is the fund manager. They are managing the portfolio of sukuk, but they're global sukuk. We have not got an Australian company that's issued a sukuk yet. There are some regulatory reasons for that. I mean, we'd love to see more of that because we want more Australian dollar denominated. But yes, Hejaz is also have an ETF. So if you want to buy an ETF, which is again, Hejaz is investing in many companies on your behalf, they also have an ETF for that as well. And there's another one they do, which is property, and I'll explain that in a moment. But thanks, that's a good idea, mention, yes?
So just to be clear, what is the difference between stocks and bonds?
Stock is you own the company. You are an owner or a shareholder in the company, and your return is going to come from dividends or the growth in the value of the share. With a bond, you don't own the company. Your only relationship with them is they are promising to pay you a regular payment.
So it's like, so it's not an ownership.
You're not owning the company. So one is you own, the other one is they're just promising to pay you back. So if I buy $100 of bonds from your company, and your company is generating a regular return from whatever activity you're doing, you will pay me back how much I have given you, plus a little bit of profit. And once you've paid that out, it might be a 1-year bond, 2-year bond, 5-year bond, 6-month bond. It's a term. It's limited by term, like a time frame. And then once that is paid off, there is no more relationship between us. But once I become an owner of the company, it's a permanent relationship unless I sell that ownership to someone else. Like I buy a part of your company, then I sell it to Asif, right? Then he becomes the owner. Okay, does that make sense? So the difference is legal relationship and the nature of the return. Yep. Is everyone clear about that? Yep. Okay. The next one is property. Oh, yes. Okay, we should finish it up. I have gone over time. I'm going to finish up with this slide because it's going to be a segue to Ustad talking about halal investing. So I'm defining the main type of investments, and then Ustad will cover the next set of, as in go through the rules. So I'm only talking about, I have mentioned a little bit about fixed stuff, but he will cover more of that. So the next one is property. Property is really easy. Everyone knows that. You can buy a property, or you can go through a fund manager that buys property for you. So Hijaz has a type of property fund which is listed on the ASX. It's called a REIT. Don't worry about what it's called. It's just basically they invest into many types of property assets. Okay? So property is another form of investing. Commodities, you can buy gold. For example, a friend of mine runs a currency exchange business called Ceylon in Auburn. It's just down here. You can go and buy gold bars. You can also buy gold bars from the Perth Mint. That's an asset because the gold value can go up and down. Okay? Gold, silver, precious metals, these are all assets. Even from an Islamic perspective, we'll talk about, in concept of zakat, and Ustad will cover that. The gold that you own, you pay zakat on it because it's an asset. Yep. All right, alternative. There are alternative forms of investments. Crowdfunding is one where you can you can participate in a crowdfunding platform. There are many Islamic crowdfunding platforms out there. And in fact, in the last couple of years, they've really grown. We have a few of them in the Middle East and Southeast Asia. And if you want to know some of them, I can mention to you. But it's a way to invest in a halal way through the crowd. So a lot of people come together and they purchase a property or they invest in a business. And of course, there's Bitcoin. These are generally considered more risky. The returns might be higher, but it's also risky. Bitcoin is a very risky investment. A lot of people might have invested in Bitcoin or other types of crypto assets, but they're considered alternative because they're not traditional how investments were done. All right, I'm just going to wrap up there. Any quick final questions on assets? Different type of investment assets? Okay? So just to, yep. Yeah, they're not halal because they have an interest. They're calculating it based on interest.
So what does the halal version makes it?
Yes. So what makes it halal is that they're not guaranteeing a regular return from just basically, you gave me $100, I'm going to give you $110. They usually link it with a real asset. Like for example, they're paying a rent if they buy a warehouse and that warehouse generates a rent, or they're going to share profit. For example, I'm going to issue a bond for $100,000 to buy, let's say, 1,000 metric tons of corn, and I'm going to sell it in the market. I'm going to sell it over 6 months, and I'm going to pay you a regular profit from that. So that is, it's not a share, it's not ownership in the company. It's still participating in the economic activity, but I am paying you as a share of my profit. So the simple definition is, it is not calculated on the base of interest. Okay? All right, so to summarize, budgets, really important. Please do a budget. Number 2, from your budget, put something aside for savings and investments. Use a tracking software if you can. Find an accountability partner that you can work with. And in terms of your investments, think very carefully about your investments and start to create an investment plan. Find a financial advisor who can help you work through an investment plan, but start even with a small amount of money. You'll be amazed at how much barakah will come from just putting a little bit of money aside. right? So my wife's portfolio, she started when we got married, in 4 years it's generated more than 20% annually. And she hasn't touched it. Why? Because she bought those Islamic ETFs, and those ETFs, those companies keep growing. That was it. Very simple. So there's a lot of easy investments out there. You don't want to miss out on them. I'll pass it to Ustad to talk about the next topic.